The 2025 African Development Bank Group annual meetings held under the theme Leveraging Africa's Capital for Development leaders emphasized the urgent need for Africa to tap into its own financial, natural and human resources to drive sustainable growth. Discussions focused on mobilizing domestic revenues, deepening capital market and channeling institutional funds such as pension and sovereign wealth assets into key development sectors. Participants also stressed empowering the private sector and managing natural resources transparently to ensure long-term impact. The meetings highlighted a shared commitment to shifting from dependency to self-reliance, reinforcing the Africa's future must and can't be financed from within.
If you recall, Afdb Bank was conceived in the late 1980s in response to the South American debt crisis. So when the African Development Bank and Ministers of Finance saw the declining availability of trade finance on the continent, they formed Afdb Bank and we started operations in 1993. So our own creation was a response to crisis. And so responsiveness to crisis is in our DNA. So if you look at the last 10 years, we have faced three major crises. Firstly, 2015 to 2017, the commodity price shock. Afdb Bank responded to this crisis by providing a 10 billion counter-cyclical trade liquidity facility, which enabled member countries to respond to the reduction in foreign currency inflows, mitigating the potential to not honor their trade obligations. We then had the COVID-19 pandemic. Afdb Bank responded significantly, not only in terms of procuring the vaccines, but in terms of engaging the continent so as to procure the medicines, the protective equipment. We provided 2 billion guarantee to enable Johnson & Johnson to give priority to African countries in terms of vaccines. So we have been responsive. When the Russian-Ukraine crisis happened, we provided a response, which is the Ukraine mitigating facility. $10 billion was put on the table. We have continued to expand the bank itself by providing additional activities. For example, we have launched the Fund for Export Development to complement the debt that the bank provides. The Fund for Export Development provides equity which will enable African countries and African entrepreneurs to establish export-oriented entities and will generate more foreign currency.
As we all know, or we hear the rhetoric that capital markets are central to economic development, channeling domestic savings, partnering with international capital towards investments in the private sector, in the infrastructure and other sectors that will fuel capital markets or wealth creation is very, very important. But listening to many of the things that have happened, you'll see that Africa's development has been a lot driven by the government institutions, and capital markets haven't been at the center of our economic development. And that's what all of us at the African Securities Exchanges Association are looking to change. When my colleague talked, he talked about raising capital in Asian markets, etc. What are we doing about creating opportunities for Africa's retail investors, our corporate investors, to participate in the development of Africa's economies? And so I would like to, sometimes we say there's no money in Africa. Is that really true? We have pension funds that just in West Africa, between Ghana and Nigeria, almost $40 billion US dollars of pension funds that every day say they don't have investment opportunities and are parking over 90% of their assets under management in government securities, which largely go and pay salaries and do very little investments in the real sector. What are we doing in the pension funds industry?